This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Carol Massar, Tim Stenovec, live here on Bloomberg Businessweek Daily. Gotta say, I'm kind of stealing a line from one of the early stories on the Bloomberg, but if there ever was a 5-day stretch that would define the second half of the year, Tim, this is it.
Okay, what do we have? We got a lot of companies reporting earnings this week. Mega cap tech and more. There's also, Carol, a Fed meeting. It kicks off tomorrow, and we hear from Jay Powell on Wednesday.
So much. A moment of truth, so says ISI Evercore's Julian Emanuel, which may explain why stocks are little changed at this hour. They're definitely off their best levels of the session, slightly lower on both the S&P and the Dow, just slightly higher on the NASDAQ 100. As Tim mentioned, some big tech earnings coming our way. There was, though, some initial enthusiasm when it comes to those trade deals that continue to seemingly be worked out between the United States and the rest of the world. We want to kind of get into what exactly has been agreed to. Also, President Trump talking about everything from tariffs, humanitarian aid for Gaza, less time for President Putin, and pressure on the Fed. We're going to zero in on life in Gaza and for Palestinians a little later, too. Geopolitics continue to be front and center as well. As we mentioned, big week when it comes to economic data. Plus, we get a Fed decision. Nancy Lazar, chief economist over at Piper Sandler, sets the table for Fed Chief Jay Powell. Quite a menu of things you can kind of look at and talk about. Also, maybe a little break from the dense news flow of this week with a little sports. Rick Welts, the CEO of the Dallas Mavericks, is going to join us to talk about the upcoming season. And yes, that surprising #1 draft pick. It's only Monday at 2 p.m. Wall Street time. I feel like already a lot going on. All right, let's set the stage for you on this Monday, where we are with about 2 hours to go until we wrap up trade. Here's Charlie Pellet.
Thank you very much. And here's what's going on. We've got the Dow, the S&P. They are both lower right now. NASDAQ holding on to gains. Stocks wavering near records. Bonds edge lower. Right now, the S&P is down 7, 63.81 where we stand. A drop today of 0.1%. In the early going, we were trading at a record, but right now we've got the S&P pulling back. The Dow down 123, lower by 0.3%. The NASDAQ Composite Index up 38, up by about 0.2%. And that Mag 7 index ahead of all those Mag 7 stocks reporting earnings this week. Right now, our index is up by 0.6%. Apple, Amazon, Microsoft, and Meta all on deck this coming week. The 10-year 4.40% with the 2-year that's currently yielding 3.92%. Gold is down $26 the ounce at $33.11, a decline of 0.8%. And West Texas Intermediate crude up 2%, $66.44 for a barrel of WTI. A 1% drop in Bitcoin now at 117,667 on Bitcoin. Among the names reporting today after the close of trading, we will be hearing from Rambus. That stock up 1.8%. Also reporting Cadence Design Systems. Cadence down by just under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec. Well, as President Trump barrels toward his latest tariff deadline, the damage to the global economy from American protectionism is becoming increasingly evident, even if financial markets seem to have decided they can live without it. So notes Bloomberg's Sean Donnan today. He writes about it on the terminal. As for President Trump, he praised the deals that the United States is making. He was talking earlier alongside UK Prime Minister Keir Starmer from Scotland.
We're making, great deals. We're making deals that are good for us, but we want them to be good for everybody. It's important. We're going to be setting a tariff for essentially the rest of the world, and that's what they're going to pay if they want to do business in the United States.
That, of course, was President Trump with the UK Prime Minister Keir Starmer this morning from Scotland earlier. Let's get into the latest on those trade negotiations. With us from Bloomberg News, Washington, D.C. Bureau is White House correspondent Catherine Lucey. Catherine, good to have you here. We've been kind of obsessed a little bit about kind of thinking about all the news we're getting. We saw earlier enthusiasm in the market. Bloomberg's Sean Donnan writes on the intersection of trade and the U.S. economy. You know that. He writes about frameworks, preliminary accords, tariff deals, trade agreements, just some of the words kind of used to describe what President Trump is inking with economies like the EU, Japan, and a handful of others on that home stretch before that deadline in August. What exactly are these deals? Are there specifics, or is it mostly a handshake or something written out on a napkin and a lot more to be worked out?
Well, I think the word framework might be the best term to use here. There are some details on these deals. There's some details we have on the latest agreement with the EU, but these aren't fulsome trade agreements that, in the sort of traditional sense of the word. We do not have those kinds of deals. Take sometimes years to negotiate. So we have some details that have been released so far, but certainly there are questions that have to be answered. And as we saw with some of the previous agreements, there was an initial announcement with a few terms, and then more negotiations and discussions continued beyond that.
So if these are frameworks and they're not necessarily full-fledged trade deals at this point, what is to make sure that a country actually follows through with what is laid out in a framework?
Well, the president has made very clear that he is going to impose tariffs on countries that he does not make deals with, and he is prepared to be tough when it comes to trade. And I think what you've seen is a lot of countries that have wanted to come to the table and have wanted to make deals. So I think, and economies like the EU. So I think in that sense, the U.S. has seen a lot of places trying to work with them to come to resolutions here.
In your view, what's still left to resolve before the first of this month?
Well, some countries still have not established deals with the U.S., especially some of the smaller economies. As we know, details are still to be worked out. With some pieces of the China deal have not been discussed yet, and with things like the EU, not every sector has been addressed. So there's a lot of sort of fine print that they still have to work on.
Yeah, it's exactly. I mean, typically, and to be fair, right? I mean, a trade deal, we know China, this is one of the focal points this week to see what the U.S. and China gets done. Having said that, something like a trade agreement with U.S. and China, this isn't something you just put together in a couple of days or a week. It's going to take a long time, right, to work and hammer out all the details.
No, these things are really complicated and typically take teams of negotiators and lawyers and a lot of negotiations. They've certainly started some, and they're continuing, and we'll see how that unfolds.
If we think about this from the perspective of the European Union and expectations that the European Union had ahead of this framework, ahead of this deal, ahead of this agreement, call it whatever you will, well, how does this align with expectations going into this weekend?
I think the EU is trying to frame this as this could have been a lot worse. At one point the president was threatening, 50% tariffs. So I think in that sense, they are relieved that they are not looking at that number. But remember, you guys remember that, a few weeks ago, the EU was hopeful of getting to a 10% deal. So this falls a little bit in the middle. I think they are pleased to have inked at least some of something, and are talking a lot about the stability that this offers, that this gives them, some framework going forward. But certainly, I think they had hoped for, at least at one point in time, we're hoping for a little bit better.
All right, we're going to leave it on that note. Hey, listen, thank you so much, Catherine. Glad we could check in, kind of hear the latest, as we've all been really focused on certainly trade and investors too, although the enthusiasm seems to have waned a bit on Wall Street. White House correspondent Catherine Lucey. All right. As we mentioned, Tim and I setting the stage at the top, a lot coming at investors this week. And I mentioned Julian Emanuel over at Evercore ISI calling this a moment of truth for the markets, because you've got big tech earnings, some of those Mag 7. You've got the trade negotiations like we just talked with Catherine. You've got the FOMC, the jobs report and earnings report. It's a lot, Tim.
Let's ask Nancy Lazar all about it. She's chief economist for Piper Sandler. She joins us from Aspen. Which is the biggest element on your radar this week? We opened our program talking about, okay, yes, the trade deals. Those are obviously very big. We have everything happening when it comes to tariff deadlines later this week. We've got earnings out this week from some of the mega cap tech players. And then, of course, the jobs report coming at us on Friday, not to mention Fed Chair Jay Powell coming at us on Wednesday. How are you making sense of it?
Well, I think really the consumer spending data we're going to see for the month of June from an economic perspective is going to be really important. Our best guess is that the consumer is going through a soft patch right now. We have already clearly seen that in the retail sales data. Within consumer spending, we're going to get more information on services. We heard last week from some of the service-oriented consumer companies, airlines, hotels, restaurants, that consumer spending in the service sector also is a little squishy. It's not just goods, it's also the service side. So consumer spending, how weak will it be as we go into the third quarter, excuse me. We are expecting a soft patch. We think it will be on the softer side, reflecting in part demand was pulled forward in anticipation of these tariffs. And you have already seen price increases, and that's also impacting consumer spending.
How do you make sense of that, given what we heard from airlines over the last couple of weeks? Not every airline, of course, but I'm talking mainly of United and Delta, who said, as we got a little clarity about what was happening with tariffs late June, early July, we started to see a real big turnaround when it came to consumer spending. How do you gel those two things?
I think it really is a bifurcated consumer. One of these days, I look forward to not using that word anymore. We've talked about that for a couple of years now, but there is really a bifurcation. The higher end business-oriented airlines I'm not an airline analyst, but they are being supported by the higher end and businesses, whereas the airlines that reported last week, a couple of them anyway, and again today, some layoffs, those are more for the lower end consumer. And the lower end consumer is really getting squeezed from these tariffs. It is basically a regressive tax on the consumer. So the bifurcation, companies that are geared toward businesses and the higher end consumer can plow through this. Those that are more tied to the lower end consumer are struggling. The consumer really is looking at price points right now.
I want to get to what our Sean Donnan wrote about on the Bloomberg today and at Bloomberg.com. And that has to do, Nancy, with the damage to the global economy from American protectionism. He notes that it's becoming increasingly evident, even if financial markets get somewhat excited as we see trade deals being done. He says it all amounts to another step change in the trade barrier that the president has erected around America, which is starting to reshape trade and investment patterns worldwide. Not his opinion, but his reporting out that Sean has done here at Bloomberg. And Bloomberg Economics saying the hit to the world economy will reach $2 trillion by the end of 2027 relative to its pre-trade war path. It's going to be a different global environment, yes?
Oh, for sure, it's going to be a different global environment. But I think we have to look at the economy as three-dimensional chess, not just as a flat board. No question, tariffs are a tax. I'm definitely more for free trade, but I'm also for fair trade. Maybe we can shake one little positive out of this and get some fair trade, i.e. incrementally sell more to Japan and Europe in particular. But to be sure, right now our effective tariff rate that we're calculating is about 17. Now it's down dramatically, but 17 is the highest since the 1930s. And so to be sure, that is a headwind to global growth. But I think that is just one part of the puzzle. The second thing that's going on in the United States is the capital spending cycle. And the tax legislation, or that was just passed actually in the One Big Beautiful Bill, indeed does very, very, very significant accelerated depreciation for capital spending, full CapEx depreciation for 80% of CapEx. That is going to be a significant boost to cash flow, corporate cash flow. We've already heard that. Last week we had 4 companies, AT&T, Verizon, T-Mobile, and United Rental, all say this tax legislation is a support for their cash flow. So again, I think we can't just look at one level. We have to look at what's going to happen to capital spending. And capital spending, I call it the ugly duckling of economic data. It's underappreciated for what it does for growth. It creates productivity, profitability, and lifts potential GDP growth, and that eventually lifts living standards. So quite frankly, I think that article is a little bit way too one-sided, and you need to look at the bigger picture. And near term, again, this economic soft patch for sure, but you're already seeing signs, the companies that I mentioned, you're seeing it in data where U.S. capital spending is picking up, and that's going to come back and help not only productivity, but the job cycle as we go through 2026. So it's important to look at the bigger picture, and I didn't mention deregulation. I'll stop, but that's also another really important support for the U.S. and therefore the global economy.
But is it, okay, and one of the things I want to go back to is you say support for the labor market. We had Rob Kaplan on, former president of the Dallas Fed, on Friday, and he said, he talked repeatedly over the tight labor market and the impact of immigration perhaps on that and how that could then impact U.S. growth. So I just want to throw that out there. But when you talk about CapEx and what it can do for growth, certainly great for company balance sheets, does it help workers? Does it actually provide momentum throughout the economy?
Absolutely. Again, it's called a business cycle for a reason. And when businesses invest, again, they improve their profitability through productivity. And if companies are making more money, if their cash flow is indeed going up, that is incentive to spend, not only on capital spending, but eventually on jobs and in wages. And you see it historically in the data. Again, capital spending always grows faster than housing. Capital spending, except potentially in recession. Capital spending always grows faster than consumer spending. And so it's really, really underappreciated. Businesses create jobs and pay wages. So near term, absolutely, I would argue we're in a soft patch. The unemployment rate is grinding higher. Although initial claims have come down a little bit, continuing claims remain elevated. Companies, I'm not sure the labor market is tight. Continuing claims remain very elevated. Companies are reluctant to hire given the trade uncertainty. We think as we go into 2026, the improvement in corporate profits, which right now are sluggish, but they'll improve into 2026, then leads to a stronger labor market. So yes, there's nothing more beneficial for the consumer than stronger productivity growth, a low inflationary environment, and that gives you stronger real income growth.
To what extent is that productivity growth, in your view, hampered or not by tariffs?
I don't think it really is hampered by tariffs per se. Incrementally, maybe from a higher cost of certain investments. As a result, we are seeing an increase in the price of certain capital goods. So at the margin, that is a little bit of a nick. But this is a very significant full capex depreciation, which again, those four companies early on in this earnings season. I can't wait to hear what happens over the next couple of weeks. That I have seen significant savings in cash flow. So we don't know yet the full quote unquote saving to companies from this new depreciation schedule, and it could more than offset anything, which I think it does, from a tariff perspective. So, tariffs are a one-time tax versus capital spending has a very long tail. And will help the economy at least through 26, if not into 27.
So, Nancy, we've got a Fed meeting, as you well know, Fed decision on Wednesday. So you say we're in a bit of a soft patch right now, but you're looking for improvement in 2026, and you see profits leading to a stronger labor market. If we've already got stimulus coming as a result of some of the tax measures by the president's big, beautiful bill, then does the Fed should they not do anything for maybe the rest of the year because they don't need to? There's stimulus already coming, and they've got to be careful about inflation. Just got about 40 seconds.
Yes, I would agree that the Fed doesn't need to cut rates. Our guess is they probably do, according to my colleague Benson, at least once, but we don't really need more than that. They already cut rates 100 basis points last fall, and that's still working its way through into the economy. So good point. Combination of the incremental, I don't want to call it fiscal stimulus. It's basically an implicit tax cut for corporations and deregulation are not inflationary. They're actually disinflationary through improving productivity growth. But net, no, we really don't need it, but we'll probably get at least one.
All right. Great to get some time with you again. Nancy, thank you so much. Have a good week. Nancy Lazar, she's chief economist over at Piper Sandler. Coming up next, the devastating reality that is Gaza and life for many Palestinians. We head to the region when we come back to you. This is Bloomberg Businessweek Daily. We're looking at a market, Tim, that is just off its lows of this session, but little changes overall.
Yeah, the S&P 500 down about 0.1%. The Dow down 0.3%. The NASDAQ Composite up 0.2%. Perhaps investors being a little patient to hear what we hear from Fed Chair Jay Powell on Wednesday. And then, of course, those mega cap tech companies reporting after the bell later this week.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P. They are both lower. NASDAQ holding on to gains. S&P very close to session lows right now. S&P 500 index is down 10 to 63.78. Have been trading at a record earlier in the session, down now by about 0.2%. Dow Industrials down 143 on the Dow. Drop right now of 0.3%. NASDAQ up 31, a gain there of 0.1%. Bottom line here, stocks wavering near records, bonds edging lower. We've got the 10-year at 4.40% with the 2-year 3.92%. Spot gold down $24 the ounce, 33.13, down 0.7%. And West Texas Intermediate crude up 2.2%, 66.62 for a barrel of WTI. Bitcoin now down 1.1%, 117,533 on Bitcoin. After the close of trading today, we'll be hearing from Rambus and Cadence Design Systems. Shares of Rambus now are trading higher by 1.7%. Cadence back in the green, up by 0.1%. And getting word this hour that Spirit Airlines is going to furlough roughly 270 pilots and demote 140 more as the financially struggling carrier trims its workforce to match a reduced flying schedule. Recapping, S&P down 10, down 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks for that update, Charlie. Do appreciate it. Now to a very serious global issue. We're going to start in the Middle East, where President Donald Trump said the U.S. would work on a new effort to provide food aid to alleviate starvation in Gaza, along with other governments and organizations, including the UK and the European Union. His comments from this morning from Scotland in a press conference with UK Prime Minister Keir Starmer.
The United States will be helping with the food. You know, we have a lot of access to food. We got a lot of food ourselves, and we're going to bring it over there. We're also going to make sure that they don't have barriers stopping people. We're going to be getting some good, strong food. We can save a lot of people. I mean, some of those kids that's real starvation stuff. I see it, and you can't fake that. So we're going to be even more involved.
That's President Trump earlier today from Scotland. We're going to head to Tel Aviv now to Bloomberg News Israel Bureau Chief Ethan Bronner. Ethan, we've all seen the pictures by now of starving Palestinians, many of whom are children. You've wrote about this, and you wrote about this last week and the back and forth, what the Israeli government has said is happening, what many in the worldwide community has said is happening, what the World Health Organization said is happening. In your view, what is going on?
Tim, I mean, you know, I wish I had the wisdom for a genuinely deep answer. I think there can be no question that people are going hungry in Gaza. I think that we are now beyond any discussion of that. The issue begins to get complicated when we're talking about famine or starvation and whose fault it is and how long it's been going on. And I have to tell you that as a reporter here who can't get into Gaza, I mean, the Israeli military and government have barred us from going in. It's been a source of enormous frustration for the entire 2 years almost that this war has gone on. You have international aid organizations talking about starvation, and you have the Israeli military saying none of it. So I think that for a while it was exaggerated. It may still be exaggerated, but it is real. And even the Israelis have acknowledged it. And indeed, as you just noted, so has President Trump. So a very difficult situation is underway where people don't have food to eat just 50 miles from where I'm sitting.
Ethan, so many ways to go here. But one thing I want to say is you say, for the most part, everyone has agreed that there's no starvation. But Israeli Prime Minister Benjamin Netanyahu says that there's no starvation in Gaza.
So, right, I said I think we can all agree there is hunger, right? I mean, these are these various technical definitions. He has said there's no starvation. He doesn't seem to be right. I think the next question is there famine? I'm not sure I know how to distinguish among these things, but clearly one, as we go down the words, we get to a more difficult situation. There is no question there is hunger. Even the Israeli military, which held a briefing for us a few days ago, used the phrase food insecurity when I pressed the spokesman, the colonel email at some length about it. So there's no doubt about that. But, you know, and we see people, we see what they look like, and we hear people talking about having no food and being afraid of dying from it. So this is not a joke.
How do reports of the hunger happening there coincide with Israel blocking aid supplies for Gaza in early March?
So at that point, I mean, I'm not a government spokesman, as you know, but the Israeli argument at that time was that that Hamas was hoarding huge amounts of this food, and that there was enough of it for a while, and that Israel was going to find a way to keep it out of the hands of Hamas for a bunch of reasons. Their main complaint was that Hamas was taking the food aid, feeding its own militants, keeping it from ordinary people, and then selling it on the market so as to continue their war against Israel. That has been challenged in various ways, but some version of that seems to be true. And that's why Israel did it, and then set up this rather inefficient organization to try to skirt Hamas, and that has not gone well.
We have a viewer who has written in and said, I'm wondering why President Trump is not pushing for a permanent end to the Gaza war. I guess if it was easy, it would be done.
You're
right?
hoping I can answer that question? Look,
I know, forgive you for giving you such a test, but I think it's been going on for how long?
I would say the following: that for most people abroad, for most people anywhere, the idea that there's a war is terrible. Wars are terrible, okay? But we do have a war underway between two forces. Israel believes that if Hamas is not eliminated, that it will reconstitute itself as a threat to Israel. I think that President Trump is somewhat sympathetic to that idea. Now, while they're trying to eliminate Hamas, if people are starving, if ordinary people have no food, this is a separate issue. So in theory, and again, I'm not the president's spokesman, in theory, if they could flood the area with food over the next weeks, then they could start their war up again, because Hamas is, after all, holding 50 Israeli hostages and has said it will not step down from power or give up its arms, which from Israel's perspective is a danger to Israel. So I think that the president is somewhat sympathetic to that reasoning. Whether that's appropriate reasoning, we can discuss at another time.
And we should point out that this week we have dozens of ministers that are gathering at the United Nations in a conference to really push for a two-state solution between Israel and the Palestinians. Mm-hmm. We should also point out, Tim, that the U.S. and Israel have boycotted this event.
Ethan, we've spoken to you constantly over the last 21 months or so after October 7th. And one thing that you've shared with us throughout that time from Israel is the view of the Israeli public, support of the war, support of Prime Minister Benjamin Netanyahu. You've written in the last couple of weeks about some weakening support within the government, which he still does control after walkouts. But what about on the ground in Tel Aviv? And based on your reporting, is there still widespread support for this conflict?
I think it is weakening. I would say that the photos and the videos of starving people, and especially starving children, in recent days has taken a toll on the public support, in addition to a range of other things: dying soldiers, the sense that Israel is increasingly isolated internationally. There are increasing reports of Israelis being attacked on the street in Greece and in Austria and so on. So there is a growing fatigue with all of that, and Hamas does not been destroyed. So I think there is. We don't have polls yet from this week showing it, but there is. I hear it around dinner tables. I hear it from friends. I hear it from colleagues. There is a growing challenge to the legitimacy and the justice of this. If, with all of these things happening, people are also starving and the hostages are not being freed. So yes, I can't tell you that there is a majority against the war, because I don't know that. But my instinct is that it is dropping.
Hamas, how powerful are they still? And I'm just thinking about the attacks in Iran, and we thought the Iranian proxies, and we thought that there was progress on this front. What do we know?
Well, we know that they're able to recruit lots of young people to join their forces. It's not surprising, given what's been going on for 2 years and longer in Gaza for ordinary people. So I think that there is some degree of strength. The problem is strength, when you're a guerrilla organization, basically means survival and being able to poke the bear, which is Israel. So it still has that ability to do it, and nobody is able to replace Hamas right now in Gaza. Israel's argument is that once it can really break the back of the organization properly, people will emerge who are willing to take up governing the place. We will see whether that's true or not. With reference to what you referred to about a two-state solution, the argument there is that non-Hamas Palestinians who are associated with the Fatah movement and with the Palestinian Authority could take over. The Israeli government's argument is that they are not sufficiently different from Hamas. They too teach their children to hate Israel. And the second argument they make is they will ultimately lose out to the more radical forces. We can't afford to let that state exist. So we're in a very difficult place.
It's an impossible question to answer, Ethan, but it's a question I think worth pondering. If the situation that you laid out is indeed what comes to pass, and I guess I could say if and when the hostages are released, then what?
Well, one of the problems with the question, Tim, is that many people believe that the hostages will never all be released because it is the only currency that Hamas holds in order to hold Israel over any barrel of any kind. Now, what may happen is this government may decide that it's gotten all the hostages out through any deals it can, and it moves in fully militarily, and the remaining hostages are either killed or rescued. And then once there are no more hostages, then Israel might continue militarily even further. Or with President Trump's encouragement and the world's anger, this government might return to negotiating with Hamas, indirect negotiations in either Qatar or Egypt, as they've been happening, and some attempt to cut a deal, at least a partial deal. But, what is the future is a very legitimate question, and I don't have the answer.
Yeah, it's just amazing and just disturbing from so many different angles, the situation. Do you expect anything to come out of this meeting at the UN? Just real quickly.
No, I don't. Depends by anything. There can't be anything definitive out of it. Right. A state of Palestine will not exist as a result of this meeting. It insists that the world would like that to be the solution, and at the moment, there is not a majority in Israel that embraces that solution.
All right, going to leave it there. Ethan, thank you, as always. Ethan Bronner, Israel Bureau Chief at Bloomberg News, joining us from Tel Aviv, Israel, on this Monday. All right, folks, we are headed for a break. We're looking at stocks just bumping along their lows of the session, down about 9 on the S&P 500. NASDAQ 100, though, holding on to a gain of 37. Some big mega cap tech earnings, though, coming our way this week in a big way.
When we come back, we're going to switch gears and talk a little sports, the highs and lows of the past year. Rick Welts, CEO of the Dallas Mavericks, joins us next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks lower right now, but holding near records with the S&P 500 index down about 8 points. That's a drop of 0.1%. Dow Jones Industrial Average down 104, down 0.2%. The Nasdaq Composite Index, pushing higher, up 32 points, higher by 0.1%. Our Mag 7 Index up 0.6%. That index includes Apple, Amazon, Microsoft, and Meta. All four names do report this week. 10-year, 4.40%, with a 2-year, 3.92%. Right now, spot gold is down $23 the ounce to $33.14, down 0.7%. West Texas Intermediate crude is rallying 2.6%, $66.87 a barrel. And a retreat for Bitcoin down 1% at 117,670 on Bitcoin. Open Door Technologies is postponing a shareholder shareholder vote on a reverse stock split after a recent run-up in the company's shares. Opendoor had previously scheduled a special meeting due to a notification from NASDAQ that it could be delisted for failing to maintain a stock price of $1 or more. Opendoor right now down by 7.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, 4 months after the Dallas Mavericks fans held a mock funeral for the franchise outside its arena following the trade of star forward Luka Doncic, they rushed back to the team's home court to celebrate what they hope will be its rebirth. It happened just about a month ago as about 6,000 people watched from the stands of the American Airlines Center as the team selected Duke University's Cooper Flagg with the top pick in the NBA's draft. Well, we've got a lot to talk about, and we've got the perfect guest. Rick Welts is with us. He's the CEO of the Dallas Mavericks, and we also have with us Bloomberg News Texas Bureau Chief Julie Fine, both of them in our Dallas Bureau. Julie, Rick, great to have you here with Tim and myself. Rick, got to start with Cooper Flagg. You were with him when he first got to Dallas. The team had such a slim chance of getting that first draft pick. How has he kind of melded into the organization so far?
Would you call a slim chance 1.8%?
Super slim
of chances, super slim. He's been great. He arrived in town with his parents, his brother, grandparents. He's a testament to great parenting. I experienced that at Golden State, my last job with Steph Curry, and what great parenting can mean. He's the most decorated 18-year-old in the history of the game of basketball at this point, coming in with incredibly high expectations. But really, everything you could see being around him for a few days, from mindset, from attitude, from work ethic, everything you can see gives you a lot of hope he's going to be everything that basketball fans expect him to be, and maybe a little more.
You know, Rick, he comes here to Dallas after a pretty tumultuous time for the franchise. At this point, from a business sense, are you doing okay? Did you lose season ticket holders? How about sponsorships?
So I got here January 1st. I'm here because Dallas is such an amazing market. The history of fan support here is just incredible. We have an expression here, Mavs fans for life. And I walked into that trying to, just being thrilled to represent the Mavericks in this market. But trading Luka, which happened on February 1st, pretty much broke the internet. And it was not something that our fans expected, and certainly not something that they embraced. And so we went through 100 days of grieving, with our fan base, understanding what this kid meant to Dallas. But now with Cooper here, I think the focus again on the future. Sponsors are probably ringing our phone a little bit more than we've ever had before. Season ticket holders are back in greater numbers than they were last season. So far, so good.
We talked a little bit earlier about time and forgiveness after something like that happens. I mean, now when you look back a few months later and moving forward, how do you feel?
Feeling great. We're going to start the season with three number one picks. Anthony Davis, Kyrie Irving, and Cooper Flagg, all number one in the NBA draft. Another future Hall of Famer in addition to Anthony and Kyrie is Klay Thompson. We're feeling great about the team that we're going to field next year, and we're feeling great about the momentum that Cooper has brought to the Mavericks.
Rick, apart from winning, how else can you continue to rebuild or redevelop that trust between the organization and the fan base?
I think that's a great question. I think what I'm walking into is an organization that probably has set the standard in terms of community engagement. Not rehashing the past, but the Mavericks had a pretty existential crisis 6-7 years ago when there was a lot of media coverage of what was really a broken culture here at the Mavericks. St. Marshall came in as chief executive officer at the time and spent the last 6-7 years rebuilding the relationship between fans, civic organizations, religious organizations, government organizations in Dallas, and the Mavericks. It became a point of pride again to be associated with the Mavericks. So that reservoir of goodwill still exists. We're going to combine that with that time-tested formula of time and winning, and I think it gives us a reason to be super optimistic. By the way, at a time when we're talking about building a brand new arena and entertainment district in the city of Dallas that'll be home for the Mavericks for decades to come.
And Rick, we want to talk about the arena. I got to go back though to Luka, and I'm just curious. Like, we've all done things where we're like, if I could do that over. And you talked about the 100 days of grieving. Do you have any regrets, or did you learn anything, especially, based on your fan reaction? But first of all, any regrets in making the trade?
You can't have fear or regrets in this business, right? It's all about how you move forward. And, so it doesn't really serve a purpose to have regrets. What I will say, I learned about the depth of the connection between Mavericks fans and this team. And that, to me, was glass half full, because I knew we could restore that over time. I didn't think it would happen quite as quickly, perhaps, as it's happened. I would also say I'm incredibly proud of how the organization presented itself for Luka's first game back at American Airlines Center when he was a Los Angeles Laker. I think if you watched that game, it was an opportunity for fans to say thank you. I think you saw the emotion on Luka's face. You saw the way that night unfolded in tributes to Luka. I think he'll always be such a big part of the history here. And, we wish him nothing but good luck, but we also hope we beat his team every time we play him going forward.
So do well, but not too well. We get it.
I want to touch back on the stadium. Your current lease is up in 2030. So I know you're looking for new spaces. How committed are you to doing it in the city of Dallas?
So we publicly said that we are going to exhaust every opportunity to place the new Mavericks arena in the city limits of Dallas. That's 100% of our focus right now, working with the city manager's office and the mayor's office, identifying potential sites, evaluating those sites for how they work for transportation, how they work for accessibility to our season ticket base. So we're in it all the way with Dallas. I expect we're going to be successful in finding that location.
When do you think you will have an announcement by when we've located this? Are you putting a deadline on yourself?
Well, I know 6 years sounds like a long time. In my view, we're on the clock. It takes this long to build a project of the magnitude that we're talking about building. This isn't just an arena. This is a 35 to 40 acre entertainment district. It'll have hotels. It'll have all kinds of restaurant options. It'll have other things that fans are going to do when they attend a Mavericks game. And it'll be the most amazing place ever to watch an NBA basketball game. So we're on the clock. We're hoping that by the end of this calendar year, at the latest first quarter next year, that we'll be able to have a flag in the ground, if you'll excuse the expression, of where the new Mavericks arena is going to be.
Rick, the building of stadiums throughout the country has been a pretty fraught process over the last couple of decades. In Buffalo, the state of New York kicked in funds for a new stadium. Kansas City is working on state funding, but in both instances, taxpayers had a lot to say about billionaires getting their money. Is this stadium going to be a private project?
Well, certainly the majority of it would be a private project. It depends on where we land, what the challenges are going to be from a transportation and infrastructure standpoint. I think one very fair ask everywhere in projects like this is that the city or whatever the governmental entity is assists in helping fans get there and helping create an infrastructure that works really well. But I don't, expect the level of funding that you've seen in some of the other projects, and we're not asking for that. We actually haven't asked for anything at this point. It's going to be very site-specific on the things that the city could do or is prepared to do. It'll have to be something that's very acceptable to the city government of Dallas, whatever that might be.
All right, acceptable. Excuse me. So, do you think that they might change the whole state, if you will, when it comes to gambling? And I only bring that up because Bloomberg News did talk with Patrick Dumont, and when he first bought the club, he wants to see gambling in the state. They're spending money on lobbyists. We know gambling is illegal in Texas, but you talked about this new stadium, this new arena being an incredible entertainment space. Would you like to see gambling be a part of it?
The two are absolutely not connected in any way. This project going forward is 100% focused on creating a sports entertainment district that does not include a casino or gambling component. So we're full speed ahead with that. That's the Sands Corporation. This is the Dallas Mavericks, and we have a project that we envision that does not include any sort of gambling component.
You know, oftentimes when you talk about the NBA, then you go to the WNBA. And I frequently hear people saying, oh, the WNBA is having a moment. The WNBA has been around for a while, but now there's a lot of new eyes on it. And of course, Paige Becker's here in Dallas, along with Cooper Flagg. But with your experience working in the WNBA, what's your reaction to what we are seeing now in terms of the growth?
You know, I'm smiling because I can't, you know how I feel about the WNBA. I was at the NBA League office and was critical part of launching the WNBA. I love everything that's happening right now. I will say, you know, taking a step back, this is a 28-year overnight success, okay? This isn't something that just happened. And I'm so happy for the players, the executives, the coaches that over the last 28 years have built a foundation that has allowed a Caitlin Clark and a Paige Beckers to come in now and ignite the kind of interest and enthusiasm there is around the WNBA.
You know, we're seeing now with all leagues media rights in the way of the future. I mean, the Mavs, you have a local, you show the games locally, but you also have Mavs TV. What do you envision the future of media being for basketball?
Well, Julie, you're hitting on the biggest local issue that we have right now in the economics of the NBA. That said, we're also next year launching a brand new national television agreement that more than triples the rights fees that teams will receive based on the new partnerships we have at the NBA, but at the national level. But locally, the model's broken. The regional sports network model is broken. And whether you're in baseball, hockey, or basketball, every team right now is trying to find a way to replicate the kind of economics and take those valuable local broadcasts. We haven't done it yet. We you know, at the Mavericks, we have a direct-to-consumer offering, Mavs TV, which has more subscribers than any other comparable system in the NBA. We also have 2 over-the-air broadcasters, but it doesn't begin to replicate the economics. It does for reach, which is great. We got to figure it out, and we haven't figured it out yet.
Hey, Rick, before we let you go, we touched on media just now. We've touched on the new stadium, and we've touched on, of course, the players. What else is the organization, and what are you doing at the organization to raise your valuation and to grow the business? Very briefly.
Well, I think a lot of that is, frankly, top-down. I think the NBA is the best managed league in sports with Adam Silver and Mark Tatum. I think our Players Association is the most progressive with Andre Iguodala, David Kelly running that. And a lot of the valuation is really driven by what the NBA is as a league. And I think I've never been more excited, but this is my 47th year of involvement in the NBA. What's happening internationally with the NBA right now is just different than the opportunity that any of the other traditional American sports have. And I'm so excited that our league is focused on growing the sport of basketball and the business of the NBA internationally. Those things, that tripling of national television revenue, those are the things that are big components of driving valuations that you know, are eye-popping these days.
Well, good luck with the season. Rick, thank you so much for finding so much time for us on this Monday. Rick Welts, CEO of the Dallas Mavericks, joining our Bloomberg News Texas Bureau Chief, Julie Fine. They are both in Dallas, and Tim and I back here at Bloomberg headquarters in New York City. Rick, be well. Thank you. All right, now let's get a check on trading. We've got stocks pretty much hovering near their lows of the session. Little changes and a slight gain on the NASDAQ 100. Carol Massar along with Tim Stenovec. So let's get to some stocks on the move. Bloomberg News equities reporter Alexandra Semenova is with us. Everybody's talking about Samsung.
Yeah, one of the big stories of today, Samsung Electronics will produce AI chips for Tesla in a $16.5 billion deal. Samsung, which is, of course, South Korea's largest company, said today that the deal will last through 2030. The plan is for an upcoming plant in Taylor, Texas, to produce Tesla's next generation AI6 chip. Tesla CEO Elon Musk tweeted about this, essentially confirming a scoop by Bloomberg on this announcement. Musk described the value of the deal as just the bare minimum. He said that actual output will likely be several times higher than most people expect. And this is also sending ASML and other European semiconductors higher today, gaining, given the fact that Samsung is their key customer.
Yeah, I looked at the stocks. Most names are higher today, and stocks is up, easily outperforming the broader market, up about 1.5%.
And Tesla up about 3.7% as we speak. Yeah, really good day for Tesla. Okay, so Nike.
Also a good day for Nike. It is climbing today, also up 3.8% right now after an upgrade from JP Morgan to overweight from neutral. Analysts there cited the earnings impact of their multi-year recovery plan. Matthew Boss, one of the analysts there, expects that plan to generate positive earnings per share growth in the high teens to 20% through 2030. The recovery plan includes things like global inventory alignment and a pickup in momentum within global wholesale order books. JP Morgan also lifted its price target on the company to $93 from $64. That's about a 22% increase from Friday's close.
He says,
a lot of optimism there.
Just buy it.
Just buy it.
Just buy it.
I see what you did there, Carol.
We gotta love sell-side research.
I think that's
always
like
so catchy.
copyright infringement. So
says the analyst.
Yeah, just
buy it. It's really cute. PayPal, ticker is PYPL. What's going on there?
Yeah, this is a pretty interesting announcement here. PayPal will soon allow businesses to accept more than 100 different cryptocurrencies at checkout. The option is going to go live in the coming weeks. It'll allow merchants to accept crypto such as Bitcoin, Ethereum, Tether's USDT, and Circle's USDC from wallets including Coinbase and others. So basically, when a consumer pays with Bitcoin, it'll automatically convert into currency and into PayPal's stablecoin to be deposited into the merchant's account.
Feels like it's happening. Time to get that crypto wallet.
Yeah.
Right? All of a sudden.
Yeah.
Crypto soaring.
Remember we talked
accessible.
Was it the Senchen Jet, right? And they said that
the wealthy young crypto people are
some payment in crypto.
Yeah, because
Jamie Dimon.
The crypto people are buying the jet flights.
Yeah, just like
even all the naysayers are now on board with it.
It's really kind of fascinating to see that. Good stuff. As always. Hey, you have a story in the Bloomberg. Just give us 30 seconds on it. I think I've been quoting nonstop from it.
Yeah, so it's obviously a really big week. I call it the Super Bowl for traders this week. Given all of the data points that we have coming up, we have a reading on GDP, we have non-farm payrolls, we have readings on inflation and manufacturing. This comes alongside a Fed decision. We have Donald Trump's self-imposed tariff deadline, and of course, big tech earnings. So it's really going to be a make or break week for markets. Obviously, valuations are back to February levels, trading at 22 times earnings on the S&P 500. So any kind of disappointment could really cause some volatility here. What's interesting, though, is the VIX, last time I checked, was still around 15. So not a lot of people hedging for a really consequential week.
All right, Bloomberg News equities reporter Alexandra Semenova. For more conversations, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts. It's making me think, Tim, so goes the week of July 28th. So goes the second half of the year.
Is that going to happen? We'll see what Fed Chair Jay Powell has to say about that.
We will indeed. All right, do not go anywhere. Coming up on TV, The Close.